Yo,
I was really grooving.
Tuesday. It's a Tuesday, Tootin' Tuesday. Man, I've been thinking about Tuesdays should be Bong Rip Tuesdays.
Trash Tuesday.
What is it?
Trash Tuesday. That is the day my trash gets taken out.
Oh, Trash Tuesday. Yeah, me too.
Which is often a trash good day for trashy stocks, and we're seeing it today. Big gap down.
And not only that, man, trash talking. Right.
Trash talking.
We hope to have a sponsor here that we can bring in.
Hefty.
With the tag talking shit this week on our talking shit segment, sponsored by. So, like, if you have a product that you would like us to sponsor and wouldn't be offended by your segment being brought in by This Week Talking Shit with Matt, and we can talk some shit, and you can sponsor the. Anyway, listen, before we get
to you by Hefty garbage bags.
Exactly. How about doggy?
I mean,
did you say doggy bags?
Like I said Hefty dog bags. Yes, I did.
Yeah. Who's making dog bags? Come on. They should be sponsoring Talking Shit.
That's right. Talking shit.
Nothing bothers me more, by the way, than walking and seeing a fucking giant pile of dog shit that somebody just said, yeah, it's all right. Somebody else will get it. Come on, man.
They just moved here from California and they're used to that shit down there.
Again, one of the greatest things since I moved to Oregon was watching people say, we need to open the border, defund ICE, we're a nation of immigrants, and then in the next breath say, we got to stop these Californians from moving to Oregon. Hypocrisy at its best. Matt, listen, Bob, I want to let you know that if you're listening to this on one of our podcast partners, at the end of the day, you got to join us or at least visit the website, marketvitals.io. Like I said yesterday, and I'm going to say it tomorrow and the day after that too, because this is what we've written and scripted. It's not .com. It's not .org info, CAEURU. It's .io. It's markets we talk, marketvitals.io. Anyway, Matt, let's
it's off to trading we go. Hi-ho!
Let's talk some shit here. How much do you love laying Gonzaga and buying Iowa here?
Yeah, I like these odds. I mean, I definitely, I'll tell you, I watched the Texas Tech Oklahoma State game last night that went to OT, and I could not keep my eyes propped open past 9:30 or so, but I don't even know who won, but it was fun to watch. There's some good talent in the Big 12 also, of which, I see Baylor and Oklahoma on that list, and West Virginia. So you have 3 Big 8s in there, and you have 4 Big 10s right now. And then you got the outlier Gonzaga and Rando, Villanova, Philly ball, right? And then Bama. I've never seen them play this year, so I didn't even know. I know Kentucky's sucking ass. Talking shit.
How about it? How about this year? Like no Duke, no Kentucky, no Michigan State, most likely. Amazing changing of the guard.
Well, I will say this, Michigan State plays Michigan twice in the final week before the Big Ten tournament. If they beat us twice and then win the Big Ten tournament, they're in for sure. Right. So I wouldn't count them out. I would not count Tom Izzo out. Matter of fact, I positively kind of guarantee that we'll probably lose one of those games.
Let's go right to our disclaimer. Everything that we talk about is guaranteed probably.
Kinda too. Yeah.
Kinda, and nothing that we say can or should be used as trading your trading basis. Like, do your own homework. We're color commentators here on the market around price discovery. Yeah. Matt, one thing that you can do when you look at the odds and things like we do is make the connection that there's gaming facilities that profit from these betting sequences. Let's go to the chart and talk about.
Well, Bob, this is a bloody day, right? We had so many gap downs, and then I want to start a little bit with, I know you wanted to start with Wynn, but I'm going to start first of all with Tesla. Okay. And then we'll come back because this is the story, meaning the market is just getting schmeezed today. And the interesting thing was, it wasn't, we were down overnight. We traded down to 38.40 on the SPOOs, and then we had bounced. I got up around 4:30. We were already like 55, and I'm like, this thing's going lower. You can feel the heaviness. And sure enough, we traded down to 3,800, 3,803 on the SPOOs, which, by the way, and we'll get to that in a moment, but that's the 50% retrace from the recent low to the recent high. So right on the button, and it also matches up nicely with the point of control on the market profile. But Tesla, Bob, we talked about it yesterday. Once it broke through, 800, this thing was going to go quickly down to, 650. That was the first level. And we hit that. And matter of fact, we went down to 619 today. Why did we say that level? Well, it's just that it just comes to the profile and where the next support levels were. And it was right in here, and it held to the bottom of that. You can see that very clearly here, Bob. But again, the next bounce, if you get a bounce up to 700 and we're at 676 right now, I would say it should be sold again. And you got some fat part of the meat above here all the way up to 800. So if you're a swing trader, 700 to 800 is your range to sell. Pick out some calls, sell them. I think it's a pretty safe bet right now that out of the money calls are going to continue to be inflated and go to zero, and sell them on the rallies like we're having right now. And what do I mean by a rally? We talked about this a little bit before. So you have two types of traders. You have day traders, you have swing traders, right? And you have portfolio managers. So they're not really traders. They just buy and hold, kind of like the bras. And they have
right, exactly.
And they do. They have tons of money coming in from retail, and they always have to put it to work. So they're in a predicament because when they have inflows and the market's going up, they have to continue buying, even though valuations may be high, et cetera. Now, when it comes to day trading, I'm going to explain today really quickly what happens. You get these gap downs like we had in Tesla, right? It was down, it opened at 660, traded quickly down to 619. And then you get everybody rushing in to cover that had been short the last few days, right? So that creates a bid in the market based, again, on the profile levels, et cetera. People come in, cover those shorts, and that's what takes this market up. So anybody who day traded and got short off that open is waxed right now, right? So day traders are losing. Anybody that was short coming in from the last week or two, as you and I have expressed, a lot of things are going on in the market that are pointing out that this is a different market. And we'll get to that later in the show. But this market is now trapping day traders. That's why we're going up.
Right. They're trapping the shorts that get in early.
They're trapping the shorts in the hole. Right. But if you're wise, you see this for what it is, and this is a change in character. Again, come back to the longer term charts and go, wow, this is broken. This doesn't reverse itself quickly, right? That's the point I want to make out. We've been talking about it for Tesla again, we made that initial high back in the 1st of January. We touched it again. We tried 3 or 4 more times, couldn't do it. This thing was heavy, 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 even though everybody was chasing it. Everybody's darling, everybody loves Elon, et cetera. So the market has changed significantly. And I just want to point that out as we get to the rest of these charts. Now, getting back to the gaming that we were talking about to open the show, Bob, one stock that actually did today, I was looking through, names that are up, and, sure and away, Wynn Resorts is at an all-time high. Again, boggling to me. Casinos still really aren't full speed, but it's telling me that the market is also discounting any COVID bullshit over the next few months is what I'm reading here. Like the smart money knows that these guys are going to be back to open without masks, I think is what this is telling us, sooner than later, right? I think this is going to happen sooner than later.
Yeah, and there's a giant pent up fuck you demand coming, and nobody makes out better than when people want to blow off steam in casinos, right? Because the casino just takes all the money when people go in there with that type of woo, we're gonna have a great time, and just here's my money, thank you.
It's so fun giving you my money. It's better than Disneyland even. Whoa.
So Matt, along with that, we can jump back to the chart here in a sec, but I wanted to share this shared on Twitter. And this chart is just a pile it on to another metric that we've been talking about. And this is margin debt for trading. And it's off the charts. Like everybody's been sitting at home, and they're like, what? I don't even, kind of like when I first started trading commodities, Matt, I can sell it and I don't even own it. I can own the stock and just borrow the money. That's an awesome deal. And this chart shows, it is off the hook here. how much higher it is from all previous market tops and bear market configurations afterwards. It's just another one that I wanted to point out, and then there's the cartoon of the bubble, and this is the bubble is far and wide. It's not just digital currencies, as far as I'm concerned. And Matt, finally we have a market structure that is starting to paint this picture. That we've been warning and talking and cautioning about how do you buy at these valuations. It doesn't, as a seasoned trader, it doesn't seem reasonable to me. The risk reward doesn't seem reasonable to me. And now we actually, we have it unfolding. And the week is still young, right? And so this dynamic could change by the end of the week, and everything could be rosy and glory. And
yeah. Let me.
For sure changed.
I said I'd take a look at the S&P, and you can see here, Bob, that old high that we had put in on the S&P is 3850. We basically just ran up to that after the open push this morning, and I've kind of pulled back, and then I'm gonna pull back just to show the little wiggle here that 3960 down to 3800 is 157 points, which again is only about 4%, right? It's not a huge significant move, and when you're looking at the profile, and this is again a 6-month chart, we're going back to mid-August, you're still bullish, and really above 3692 is still the top of the meat of the profile for the last 6 months. So we're just, if we came back to 3700, that might be as long as that area held, because there's a lot of interest in that level, that's your next big level. That would be a good area maybe where we could see a half back bounce. But I want to point out kind of what we saw intraday today, and that is, again, we whooshed off the open, trapped all the day shorts right off the open, which is typical again, and we had been going down. Remember, this was really the third day, and I'd say 6 days in a row that the S&P has been down. So this is kind of might have been the late whoosh to shake out the final people. But what you're seeing here is you saw the whoosh, trapped all the day shorts, they crank it up 60 points, right? If you're day trading, that's a lot. That's a big move. So that's exactly what happened. You had people now scrambling, get out. Now they exhaust, right? And you still have a day profile that's pretty bearish, very top heavy. In other words, you want to sell now for the day. Now, if you're a day trader, 345 to 365 is the range I would be selling. And then you start stretching, to a week-long chart and go, I would love to sell 3875 again up to 3925. So which time frame are you behaving on? And understand that time frame needs to rule the rest, right? And then coming back, Bob, if we go to a 1 year chart, right? Big picture, which isn't huge picture, but your point of control is back here again at 3372.
Right on.
So yes, and the retracement lines that we had there was just, drawing from the recent low to the recent high. And that we hit right on the button this morning. Again, I'll zoom in just so you can see that. But we hit right on the button, the 50% retrace. And that was right here at 3809. We went through it, sliced through it like butter, but they couldn't, they found buyers right there at 3800, which all the technicals, that's where people will find support typically with that. So market, again, I like 2-way trading. This market is giving traders, both midterm, 2-week type traders, great trade setups. You probably covered a big chunk of those today, and you're looking to put on shorts again, because again, we've kind of rotated from long only to a 2-way market. And you can trade the 2-way market if you know the levels, right? You need to know them pretty solidly, but there's some opportunity. I've been talking about this, Bob, that the S&P ranges in the first hour had been still only trading 10 minutes. Today we expanded. We went all the way to a low of 3,800. And then by 740 or 730, we were back up here. So again, you're looking at 50-point range for the first time in an opening hour candle. We haven't had that in a long time. So that's a change of character. We haven't had those types of moves on the upside. It's just been ticking up. So this is a complete change of character that you're seeing in the broader markets that we keep pointing out. And, I would like to talk about some of these stocks when you're ready, but I want to show
let's talk just for a little bit. I just want to continue on this theme of the bubble. Come on, Heifer, what are you doing? Of the bubble. Hold on, though. Let's talk about it in crypto. It's our little crypto segment, Crypto After Dark, Matt. Just the truth, all right? No rumors, just the truth. But I wanted to point this out too, because this was trending on Twitter. Bitcoin plummet 17%. Buy the dip is trending.
Was that the Twinklevoss twins again?
I don't know, but it's trending enough that and I just wanted to kind of talk about when the market dynamic starts to change. Just like it was the dynamic on the long side, all the shorts falling over themselves every time they tried to sell a level and it didn't hold. This is kind of evolving here, in my opinion, on some of these assets. It's as you buy the dip and then it rallies and you're like cheering yourself, but you don't get out. And then the market turns again and starts to fall. And now all that new action is underwater again, rinse and repeat. And that's why, you couple that with the amount of margin in the market and the overvaluation that we pointed out, especially in stocks where there's an actual metric for it. I mean, in Bitcoin, the overvaluation is whatever you think the value is. It's not, there's no earnings per share for you to make a relative judgment of what that value is. It's just what the crowd thinks. But for sure that you get that idea that the market can just, people longs get in and then we used to call it falling on their swords, Matt. Like they got it, they had some money in it, they didn't get out. Now they're underwater. If they're margin, they're motherfucking themselves and they got to get out. And I wanted to bring it up because I wanted to point out this when markets, and I've noticed this for years and years and years, and this was back to yesterday, the Ether chart on Kraken that washed out to around $700. And I've noticed this over my years that lots of times when there's a ridiculous move that everybody says that was ridiculous, like the price discovery was horrific. Where were the bids to support this? Yet the market sometimes has a tendency to revisit that ridiculous level and prove that, maybe it wasn't so ridiculous after all. Yeah. And, in the Twitter feed that on mine, that basically went right down to the longest term, or not a long-term point of control in Ether. I'm not saying it goes there again today. I'm just saying that they pinged $700 now on really shitty price discovery at Kraken. And in my opinion, the market has a tendency over the years, and I've seen it time and again, where the market revisits that shitty price discovery.
Yeah, and today's here's what's interesting, Bob. Yesterday, crypto kind of led us, and we talked about this yesterday. We had this whoosh down. We talked about this on the show. We talked about it at marketvitals.io for our viewers. This rally that you're seeing, we said this yesterday afternoon, should be sold, right? Because we're going to come back and test this low. We need to test that low. It may not be tomorrow. Turned out it was, but this is a great sell opportunity. Guess what? That price was almost 55 grand, Bob. We went down 10 grand from there. We went down more than 10 grand. We breached 45,000. So my friends, this is a great setup. And I can show you this in all your coins and think, okay, so crypto's down net 12% right here. But it's down 20% now from the high, which was 59,000, more than 20%, right? Let's look at some of the names that we've talked about here, and that you'll see the same exact pattern. And then I'm going to get to where we are with stocks today. So follow me here. We're talking kind of what was leading us, the momentum, the craziness, and the cryptos. Once that broke yesterday, they all came back. Here's your Hedera, right? It dipped all the way down here to 11 cents, Bob. It rallied harshly up to 14. First squeeze is always, again, whoever gets
first squeeze is the deepest. Isn't there a song?
Yeah, I mean, it's funny, but it's true. It happens all the time. The people that just get short in the day trade are the ones that get trapped, right? And so this is why you need to sell strength if you want to be a good short seller. It's the hardest thing to do, I understand, but it's the only thing to do if you want to make money by short selling. So you have to sell strength. All right. So this bounce back, let's say you got in at 12 cents, 13 cents, Bob, again, this thing went all the way down to 9, crushed them. Dash. I'm going to show you these charts almost look identical. I can't make this stuff up. Dash yesterday flushed down to 192, came back to 275, Bob?
Dude, right on the top of the profile too. I mean, just gorgeous.
Beautiful setups on short term. If you're a short-term trader, you can't get much better setups. Link, Bob. Same thing. Look at these. Boom, boom, boom. Mechanical. This is mechanical trading. This is when you make your money as a trader. 20% of the time is for these days like this. You are throwing money because it is pure emotion. It is not rational. It's pure human behavior. Now I'm going to jump to the stocks, Bob. Remember the SPACs that were so hot? You want to see how?
Yeah, sure. We spent a couple of weeks talking SPACs.
You want to see how fast that fast money gets removed? And how little, if you can't trade pre-market, Bob, this thing was trading 60 at the close yesterday. It dipped down to 30. It got cut in half.
Unbelievable.
It got cut in half. If you don't have protection, your stops don't do shit in an equity. And I want to talk about this, Bob, because people don't understand. You and I have been talking when these things get cut in half overnight, and I can bring up a whole list of names, as you can see, that I've got ready to go here on my right side, from Riot to Mara to MicroStrategy. We've mentioned all these stocks and what piles of shit they were, and warning, and you should be short. Boom, like there's your payday today. It just came in. Take money off the table.
Well, I mean, and don't you think too, as the story evolves, like we talked about it before, that, the long-term chart, it takes a while to evolve. And
Yep.
So if this truly is going to be a market top, and let me share for a second here, because I just want to point the incredible fucking symmetry of this year and last year. Hold on a second. On the monthly, Let me get her all set up there before I jump to yapping away. There we go. And we talked about it last year. This was January of last year, a perfect doji high, right? And then the next month they just crucified all the doji people, right? All the candlestick makers, and they went and made a new high. And we got the same type of analysis going here this year, this January. We put in a shitty January. We talked about it. As January goes, so goes the market. Yeah, just like last year, not so fast. The important thing that I want to point out is that if this thing does continue to evolve and deteriorate, we are still on the moon here. And so, the market is always, Matt, it's always an evolving story. But for me right now, the evolving story is that the weekly out of up momentum, the 3-day out of up momentum almost took out the average, the daily firmly in lower momentum and kicking those bands down for lower potentials.
Yeah,
those are all storylines that if you're not paying attention to, that's how you get in trouble.
And by the way, another simple indicator I use, just a simple 10-period exponential moving average, tells you which side of the market you should be on, long or short. We're about to flip to the short for the first time on the daily when it comes to the S&P. First time since late October, which, again, you're talking 4 months. So we've been nothing but trending up. So, it's probably time for a break. And usually, if this is just a counter trend within a longer trend, there's plenty of room, by the way, as we've discussed, to go much lower and still be bullish. I mean, we can go down to 3,200 from 3,960 and still still be bullish.
Yeah, and I think the other thing that you need to pay attention to, especially on breaks, is the rallies. Bear market, the rallies are vicious.
Yeah, and let's talk about this because I didn't really finish on Churchill, and Churchill is the auto SPAC du jour, right? Went from 60 to 30 intraday, or at 60 to 30 before it opened, basically opened half off. Then it rallied to 44. Guess what? 50% retrace. Also, the sweet part of that profile, it's going to come back and test, right? Whether it goes to this, I can't tell you right now. But this was a great trader right here. I mean, just a great trading device. Riot, and I'm going to show these other, Bitcoin related stocks now. We're going to go Riot, Mara. We've talked about these again. This thing just got slaughtered, Bob. 84, and we talked about this last week. You want to be short. That this day we said was the warning. We talked about it this day. Sell that rally, yeah, went a little higher, but it didn't take out the old high, right? Very, very obvious setups here. And then from 76, it's all the way down to 46. Again, today, you're going to see, but I'm showing these patterns because so people can learn. Okay, if it bounces, sell that bounce in the first hour and a half. It usually pays off with the direction of the break, right? If we had broken up, you want to buy any dips that you got, but you're not. We're in a different market now. Mara, another name, obviously related to the crypto space, from 50, Bob, all the way down to 26. Again, half off in 3 trading days, half off. You don't think this shit can happen, bras? It happens, and you need to wake up to this. Like, these equities get slaughtered. MicroStrategy, we talked about as being a big name and leading the market in 2000 to the
How about, I mean, we've been on the MicroStrategy story for months now.
And from 1,300, Bob, 2 weeks ago, down to, we dipped into the sixes today. We got down to 682, and we're right just off it at 709. But let me give you some perspective. This thing ain't done. It ain't done going down. Just because it's down almost 50%, it's got more to go. We're not even to the top of the profile on the daily, Bob, which gets you back to 500. That's another 200. That's just the top of the profile. The meat is still back here at $150. I kid you not. Kid you not. So much, long term, there's so much room in so many of these unicorns that, again, we did not see this many unicorns in 99, 2000. We never did, to these valuations, to the, billions and, trillions. Apple's worth $2 trillion today. It's insane. It's insane.
All right, Matt. I don't know what else I got. Was this a fast one? Did we rip through this? It's been so much fun. I can't even keep track of time.
Well, let's take a look at one more. Well, I've got a couple minutes. XRP, right? Everybody's favorite,
Everybody's favorite.
Again, no safety here. No safety, and I want to talk a little bit about gold, because
you know what? Don't even get me started on gold, because I
don't know how many times I can ring the bell and bang you over the head, but you gotta be short.
I want to share my chart with you on a personal level. This is what you need to be a part of the network to see the deep inner workings of my mind. Join Market Vitals, and I'll share you the chart of gold that I think is the most interesting. But go ahead. Please share.
You can see it right here.
You're not sharing. We're not seeing anything. I'm seeing your.
Well, gold, just to point out today that gold is there's no safety in gold versus Bitcoin versus equities, right? Everything sold off. It had the little rally that you were getting all excited about, in the last couple of days. I said, I'm a seller. It paid off again. I'm sorry, but $20 easily, 1%. Even on a shit day, gold is red. All right. So
You're talking that Peter Schiff is continually getting it shifted in his ass.
Peter Schiff is getting,
I got Peter Schiff. I for all the hashtags that I want to trend, hashtag that shit in particular. But Peter Schiff, if we can change that definition to something that got wedged in your ass, I think that would be good for everybody.
I have one more, because we haven't talked about GameStop, because those things kind of got slaughtered. But the one that finally came all the way in also, Bob, was Fizz. Remember, that was another.
Oh yeah, Fizz, the beverage people.
Yeah, you remember that, right? Got up to what it was, $100 somewhere in there. Yeah, look at that, $100 back to 47 today. Again, just wanted to point that out. That again, you better call Maxine Waters, because you made a bad trade, and she doesn't know anything except
the government is here to save you, Matthew. That's what it's here. That's why the government is here. I hold on a second. Let me find the exact quote, because I thought it was perfect. I have too much interaction. I can't find anything anymore. It's this. For every complex problem, there is an answer that is clear, simple, and wrong. The Mad Prepper shared that from, it's a quote from Mencken. I don't know who that is, but let me say it again. For every complex problem, there is an answer that is clear, simple, and wrong. And for me, nobody brings this home better than our fucking elected officials. that seem to have the answer for everything, and actually they don't.
Hey, Bob, two more commodities I want to touch base on that we've talked on. Orange juice continues to benefit from the cold weather. Again, back here in February, early February, it was 106. It hit just about 115. We're testing that again. We're up here at 114s. So again, that's getting back into the meat. It's been a nice little trade to the upside there that we suggested. And then natural gas with the weather event, maybe to me being the reason now to maybe take a pause as we turn into spring is right around the corner, whether or not there are groundhogs or not, spring is coming. And we talked about this again last week, that blow off on that day that, the sky was falling in Texas. Well, that's probably a good time to lighten up on your natural gas. And sure enough, it's off, Bob, now 15%, 16%.
Right.
So
I mean, so many times too, like it took me a long time. I'm a storyteller and I like hearing stories. And that's for me, it took me a long time, and I still get caught up in the story. The story was old. I mean, we talked about the weather January 15th when the article hit that we shared in the network on the polar vortex collapse, right? Where's natural gas on January 15th?
Well, it's right here in the low, 240 when we were
exactly
on the table to buy. That's the time to buy, not after the weather comes through, before the weather comes through.
Exactly.
Before the masses get sucked into the story on TV. By the way, turn off the TV, turn off your CNBC, and watch marketvitals.io, because we think like traders. We don't think like, oh, what headline can I attach to the sell-off today?
Matt, that reminds me of back in the day when I first moved off the floor, and I had an 8-screen setup, 8 screens, charts everywhere, and sitting there, and on the channel we had CNBC on a lot, but again, we're like, it's just distracting, right? So we had the military channel on our cable feed, and I'm sitting there and I got 8 screens, and I'm stressed out of my mind trying to keep up. And on the military channel, there's a military general, a U.S. military general, and he's talking about cyber warfare and the capability of a human brain interacting on screen. And he said, a human brain isn't really effective at looking more than one screen for more than 15 minutes. And I'm sitting there and I'm like, did he just say I'm only good at watching one screen for 15 minutes and then I start to suck at it and I got 8 screens up? I mean, so.
Well, again, today's a day, but here's the thing, Bob, he's right. But today's a day where an experienced trader will know that if you have hotkeys set up for your orders and you have 20 stocks that are all crypto related, you can push the button on all of them, Bob, because they're the same. Like, there's not, and my point is, not every day is like this, but this is one of those days where it's purely mechanical. I know exactly how the market's going to operate on a whoosh, right? There's no doubt it's a gap and it hasn't been gapping. So it's a change in character, which is going to then trap, again, day shorts. It's going to be a great two-way trading market. I know that because I've seen this so many times in 35 years. It's not new to me. I don't panic. I wish for days like this. I wish we had days like this every day.
Right on.
Because you can day trade, you can position trade, you can swing trade. You got all three going on, in the matrix, and they're very fun days. But you do have to have tools if and to your point.
Well, I mean, yeah, I guess that's the point. Is like I thought that the 8 screens and all that information was going to be good for me and it's like that's an impossible task.
Well, I'm guilty. There was a day where my ego thought that was cool too. And I think I'll top you. I think I had 22 screens at one point, including 3 or 4 TVs. So
get the front door.
Yeah. And they were like, I had them with CRTs back in the big boxes, Bob. I had the fucking Bloomberg. I had everything. You know what? And I finally got rid of it all like in 06. I'm like, I don't need all this. I went down to 2 or 3, and now I'm down to 2 sometimes. I have, I'd say 3 because I have a large TV. I have that gets pushed from the box, and then I have a large 27-inch screen, and then I have I have iPads and I have phones, right? So, but I'm not on the iPads and phones much. They're just kind of there for if things are really busy. I don't
fine tuning, Matthew. Fine tuning.
Well, you can set alerts, and I trade by limit anyway. So I put my orders in and I leave
Right.
them. And then I come back and go, okay, I'm long that, I'm short that, I got no position there, didn't fill, right? And then I kind of update it as I go throughout the day. That's what discretionary trading does. I'm not computerizing all this, but on days like this, you can hotkey, portfolio stuff that works very well, and do it based on timing. It's timing of the day.
All right, Matt, another fantastic episode of Market Vitals. Please share the podcast. Please share the video. Please do not like it. We don't like likes. We like shares. We want shares. Spread the word.
We like likes too.
No, we don't. I want the don't like and a share. I'm still going to.
Well, don't like and share. I like that.
All right, Matt, you have a great day.
Bob, I like you. Thank you. Have a great day too.
Right on, pal.